Welcome back, you legends. I'm Dr. Kyle. Let's get right into this video. I'm calling a bottom. That's right. I think this sell-off is over. I think this crash is over for now. Let's get right into it, everybody. The stock market today is down 1.5% on the S&P, 1.5% on the NASDAQ, and 1.7% on the Dow. Leading today was real estate, basic materials, and energy. Lagging were consumer cyclicals, utilities, tech, and consumer defensive. So it's a bit of a mixed bag today. Real estate got really hammered yesterday, and we're seeing some buying come back into real estate as yields begin to cool down. Because as we all know, guys, high yields damage real estate really badly. This is the 10-year yield, and it seems to have started to cool down. I'm not ready to call a top just yet, but it has started to cool down. And we're seeing that feed into tech as well as gold and other commodities. We're going to get into all of that in just a second, but let's start with the S&P 500. This is the daily chart of the S&P 500. And today in the trading community, I was watching the S&P 500 like a hawk, waiting for a touch of this support line. We finally got our touch really in the last 5 minutes of trading. I was waiting for this touch. I was actually hoping for a slight undercut where we go down to 356, which is the weekly expected move. We got super close to the weekly expected move, close enough in my opinion to start calling for a bottom. The market sell-off, guys, is probably coming to an end on Monday. Next Monday, we'll probably get a green candle or an indecision candle, something that looks like this. And that's it. That will be the bottom, in my opinion. Today, guys, this sell-off today reminds me uncannily of this sell-off and this sell-off right here. And we ended up bottoming the next day. So next Monday, I'm expecting a gap down, some more pressure to the downside, one last sell-off to the downside, and that would be it. Why? Well, we have a lot of reasons. A lot of indicators are indicating that a bottom is extremely close. Let's start out with the HYG, my favorite signal of all time, the smart money up top and the dumb money down below. This chart up top, guys, is the HYG, the high yield bonds, the bond market, the smart money. Below it is the S&P 500 or the stock market, the dumb money. And right off the bat, we notice a very obvious bullish divergence where the S&P 500 has been putting in lower lows while the HYG has been putting in higher lows, forming a bullish divergence. The last time we had a bullish divergence like this was back here, where the HYG bottomed on June 13th, and then we continued to make higher lows, and the S&P 500 continued to make lower lows, finally putting in the bottom on June 17th on the 5th day of the divergence. Today, we've made our 4th day of this divergence, and so we could get one last day where we get a sell-off, an indecision candle, a doji candle, something like that next Monday. And in my opinion, that would be it. The sell-off would be done, and we would begin a new uptrend, at least until the middle of October. Another bullish divergence signal is here. This is the VIX up top, the fear index, the volatility index, and below again is the S&P 500. And just look at this, guys. We've been making lower lows while the VIX has been making lower highs, forming a divergence, indicating that selling pressure is coming off and more people are closing their puts, their put positions, and they're buying calls. So they're turning more bullish. The exact type of divergence occurred right here in the June bottom as well, where the S&P 500 continued to make lower lows while the VIX made a lower high, marking the bottom on the S&P 500 on June 17th. I think next Monday will be the bottom, and that would be that. Let's take a look at the triple Qs. The triple Qs were actually outperforming the S&P 500 right up until the last hour where we had that selling. Really, the majority of selling today, guys, came in the second half of the day, and most of it came really in the last couple of hours of trading. Again, guys, I think today in the triple Qs is this day back here. It looks pretty much identical to me. And so I think we'll get one last gap down and then a rally. Let's take a look at the dollar index. The dollar index is cooling down, but is finding support at this prior resistance line, now a support line. Now, guys, I drew up this resistance line before we had this blow off top in the dollar index, and we're now seeing structure form around it. If we see a break below it, that will be another bullish signal to go long on equities while the dollar index cools down, before I think it will start to move back up again in the second half of October. This is the 10-year yield. Again, the 10-year yield is still in a bullish context. It's still making higher lows and ever so slightly higher highs, but we might start to see the 10-year yield begin to cool down as more and more money flows into bonds, things like the HYG and long-term treasuries, the TLT, which may be forming a bottom alongside the S&P 500. Very interestingly, guys, this is gold. Up top is gold. Below that is the S&P 500. Today, we finally got that bullish crossover signal that I was waiting for, and I marked every single time we had that bullish crossover signal. And what do you know? When we get that signal, we tend to have a nice rally to the upside. So again, we're seeing another bullish signal indicating that we may have bottomed. Now let's jump into my CPC put to call ratio buy and sell signal. I've been working on this signal for weeks now, trying to refine it as much as possible to eliminate any false readings. And I was finally able to crack the code. And I shared this buy and sell signal yesterday. I will be sharing now this signal in my videos. And the way to read this signal, guys, is this. When we get a bullish crossover on the PPO, while the CPC, the put to call ratio, is trading below the 95 reading, that triggers a sell signal. Systematically, when we get a bullish crossover and the CPC is trading below 95, that indicates a sell signal. It has to be trading below 95, and then we need to see a cross above 95 to confirm the signal. Again, right here, we had a bullish crossover and the put to call ratio was trading below 95, and then it crossed over, and that confirmed the signal. Again, right here, guys, a bullish crossover. The put to call ratio was trading below 95. It then crossed over, and that confirmed this sell signal. Now, it also works to mark bottoms, and the way to read the buy signal is, one, we need to have the put to call ratio trading above 1.1, and then for the PPO to make a bearish crossover, and that's what we had here, and that confirmed a buy signal. It happened again right here, guys. It was trading above 1.1. We had a bearish crossover, and it confirmed a buy signal. Now, this signal, guys, tends to lag the bottom by about a day or two. So we will probably see this signal getting triggered next week, let's say on Tuesday or Wednesday. And if we get a bearish crossover and the CPC begins to move down below 1.1, again, that will confirm a nice rally to the upside. Now let's jump into seasonality, and again, seasonality is on our side. We tend to see a nice rally towards the middle of October, beginning in early October, and then lasting into mid-October before that one last dump, forming that low towards the end of October, and then after that we tend to get this nice rally in early November and that nice holiday rally in December. Now let's take a look at the economic events that we have coming up next week. Monday, we'll have the manufacturing PMI. Tuesday, we don't have much going on except for Fed speeches, a lot of Fed speakers. But most importantly, we'll have the job openings. The Fed wants to see this number shrinking. They want to see fewer job openings, and they want to start to see the unemployment rate beginning to tick up. Wednesday, again, we'll have some jobs numbers coming out, and also we'll have another PMI manufacturing number coming out. Thursday, we have the jobless claims and some more Fed speakers. And Friday, we'll have the unemployment rate coming up. Now, if this figure ticks up above 3.7, that will be a bullish signal because that's exactly what the Fed wants. And as long as the economic numbers move in the Fed's favor, it becomes more and more likely that the Fed will ease on the rate hikes. Now today, guys, we did have a lot of economic figures dropping. We had the spending and income numbers come out. They both came out above expectations, slightly above expectations. PCE also came out. It came out again above expectations month on month. It was higher than expected, and the core PCE was higher than expected month over month. Consumer sentiment declined, 5-year inflation expectations declined, and the Michigan inflation expectations for September came in line. So it was a bit of a mixed day. We did have some bearish numbers come out. The higher than expected income and spending numbers, as well as the higher PCE figures, were bearish, but in my opinion, that was already priced in because the market had already sold off very considerably ahead of that print. And so guys, to summarize, I think this is it. This is the end of the sell-off, at least this sell-off, and we'll start to see a nice rally towards the beginning of October, lasting into mid-October before we get that second sell-off towards the back half of October. I'm going to start building out my long positions again next week, and I'm going to alert everybody in the trading community exactly when I'm going to do that. By the way, guys, if you are interested, it's $20 a month. If you want to support me, that's the best way you can do it. And I do share all of my technical analysis in real time and all of my trades, my exits and entries in real time in the trading community. Check out the link in the description if you are interested. That's all I have for you today, guys. Thank you so much for watching, and I'll catch you in the next one. Bye-bye.
Oh, wow.